Welcome, everyone, to the annual overview session for the Low-Income Housing Tax Credit Program and the Qualified Allocation Plan. We know that you'll have questions, and we want to provide the answers. Details on how to will be provided at the end of this webinar. My name is Terry Nash Giovannucci, and I'm here to kick off what promises to be an informative and engaging webinar. This is intended for applicants preparing 9% LIHTC application and any others who are interested in learning more about the tax credit program, the 2025 QAP, and the application process. I am joined by my colleagues and subject matter experts from CHFA and the State Departments of Housing, Developmental Services, Economic and Community Development, and others whose expertise and guidance may inform your application preparation. My role is to set the table with a brief discussion on policy and how it impacts and establishes the 2025 QAP. CHFA is the state's housing credit agency, and per the Internal Revenue Code, has adopted the QAP to set forth the selection criteria that is used to determine housing priorities appropriate to local conditions throughout the state. CHFA's Board of Directors and its task force periodically convene meetings and consider the allocation of tax credits, the QAP's role in supporting the state's affordable housing policy, and revisions that might be taken. Current policy goals, past production, and comments from the public inform any revision. In developing the 25 QAP, we continuously welcome stakeholder input through informal and formal sessions, including small, industry-specific focus groups. The QAP is itself a policy document that incorporates by reference several other state and CHFA policies and procedure requirements. These include the Consolidated Plan for Housing and Community Development. The CON plan may be found on the DOH website. Its overarching goal is to develop decent housing, affordable to all, to ensure a suitable living environment, and to expand economic opportunities, principally for low and moderate income persons. Conservation and Development Policies Plan for Connecticut may be found on OPM's website. Among other policies OPM articulates within the document is to provide choice across income levels, utilizing current infrastructure and the preservation of existing residential neighborhoods and housing stock. The Analysis of Impediments to Fair Housing Choice, 2015, is another document found on the DOH website. This is an analysis of fair housing choice to inform future development. Additionally, CHFA procedures, policy statements, and guidelines are made part of the QAP and include those listed here and in the QAP. All of these policy statements, the guidelines, the procedures, the glossary, everything you see here and in the QAP is found on CHFA's website. The two-year 2024 and 2025 QAP is essentially unchanged from the prior QAP in terms of policy goals, classifications, and the weighting of points. There are two classifications that do not compete against each other: preservation and new construction, and we anticipate that 25% of the reservations from each annual credit ceiling will be made under the preservation classification, and 75% of the reservations will be made under the new construction classification. Preservation is very important to Connecticut. It is defined as developments that primarily constitute substantially rehabilitating or replacing existing and occupied affordable multifamily rental housing, with or without net new unit production, and that maintains or improves current affordability so that no existing residents are displaced. Applications submitted under the preservation classification will not be scored, but instead will be evaluated based on specific priorities. There are no points awards. Applicants compete against each other within the category only. Applications submitted under the new construction classification will be evaluated against each other and will be rated and ranked using the point system outlined in the QAP. Continued broad policy goals include ensuring rental affordability, financial sustainability, municipal commitment and impact, deconcentrating poverty, and creating housing and higher opportunity areas, as well as the qualifications and experience of the development team. You will see by weight the greatest priority for the state and for CHFA is rental affordability. Deep income targeting and mixed income housing, inclusive of supportive housing for special needs populations, remains a key policy goal for us as we support the state's work to end homelessness. You will learn about the point structure, the application process, and a lot more in Deb Alter's presentation coming up.
Hello, my name is Debbie Alter, and I am the Senior Program Officer for Program Administration here at CHFA. One of my responsibilities is to oversee the 9% Low-Income Housing Tax Credit Round. I will be explaining the Preliminary Application Conference requirement, the 9% LIHTC round review process, and I will provide you some helpful hints to assist you in submitting the best and most competitive application possible.
I'd like to start by reviewing the important dates associated with the 2025 9% LIHTC round. Developers interested in applying in the 2025 9% round must submit a preliminary application through the developer engagement process announced by the Department of Housing. Preliminary applications will be accepted until October 25th, 2024. Applicants who submitted in the spring 2024 developer engagement process are not required to submit again. However, it is helpful for staff to have the most current information on a project for the required pre-application conference. All applicants are required to attend a pre-application conference with CHFA staff. Conferences will be scheduled upon receipt of the materials submitted through the developer engagement process. Conferences will be held until November 27th, 2024. Please be aware that pre-application notifications for SEPA and SHPO must be submitted no less than 90 days prior to the application deadline for the upcoming 9% round. These notices must be submitted by October 18, 2024. Applications for the 9% round are submitted via Sharepoint. Sharepoint sites may be requested beginning November 4th, 2024. The last day to request a Sharepoint site is January 8th, 2025. Applications for the 2025 9% LIHTC round are due no later than 4 p.m. on January 15th, 2025. Sharepoint sites will automatically lock down at 4 p.m. on January 15th if not already locked by the applicant.
CHFA's procedures require all applicants for low-income housing tax credits to attend a pre-application conference with CHFA staff. This process starts with the submission of the preliminary application, following the same process for the developer engagement process that DOH has announced. 9% applicants will complete the same preliminary application and be subject to the same deadlines. Preliminary applications will be accepted between September 23rd and October 25th. Once a preliminary application is received, CHFA staff will be in touch to schedule a virtual pre-application conference. Participants will include CHFA underwriting and technical services staff, as well as DOH project management and technical services staff. Applicants are welcome to include any members of the development team that may have questions or would be helpful in the discussion of the project. This will be a high-level discussion of the proposal, and staff will be available to answer questions about threshold requirements, underwriting and construction standards, and the review process. Please note that staff cannot give you a definitive determination if something will receive points or not at the pre-application conference. This can only be determined once a full application is received and reviewed. It's worth repeating that the application due date is January 15th, 2025 by 4 p.m. Sharepoint will automatically close to further uploads at that time. Sharepoint sites must be requested by January 8th, 2025.
and this process will be explained later in this session.
Applicants must send checks for application fees to CHFA's office in Rocky Hill. Fees are different for nonprofit and for-profit applicants, and please note that certified funds are not required for application fees. CHFA staff will begin to review the 9% applications following the due date. All threshold requirements must be met for applications to be considered. This includes evidence of compliance with the basic threshold items outlined in the QAP, as well as all of the items on the exhibit checklist in the consolidated application that are marked with a T. Applications that fail to meet threshold requirements may be immediately eliminated from consideration. There will not be a deficiency period or any further opportunity to provide application materials. Please ensure that the application submission is complete. CHFA may seek clarification on underwriting items included in the submission, but new information will not be accepted and material changes to the application are not allowed. CHFA staff will notify the applicant in writing of any clarification questions, and if necessary, a conference call can be scheduled to discuss these questions. Applicants will have 5 days to respond. Clarification calls are anticipated to take place in February and March. Applications are put into groups with varying internal deadlines for reviews, and clarifications will be sent out on a rolling basis. Please be sure that all of your points exhibits are uploaded to Sharepoint and clearly marked with the exhibit number as shown on the exhibit checklist. Once the points review is complete in early April, CHFA staff will provide the final score to the applicant via email. If necessary, a call may be scheduled to review the scoring determination. This will provide a chance for an applicant to point out items that may have been missed by staff or verbally clarify items that may have been misunderstood. But again, no new information will be accepted. Final score determination is at CHFA's discretion. Award recommendations are targeted to be presented to the CHFA Board of Directors at its April meeting,
Currently scheduled to take place on April 24th.
There are 2 classifications of applications that are outlined by the QAP. The first is the preservation classification. This is for the substantial rehabilitation of existing and occupied multifamily rental housing. If the property is being demolished, the proposal must include at least the same number of units to be considered in the preservation classification. If it's less, it would be considered in the new construction classification. However, it can include the addition of more units. The preservation classification applications are not subject to scoring, but they are evaluated based on a list of priorities that are outlined in the QAP. The second classification is the new construction classification. This includes any application that is deemed not to be eligible for the preservation classification. These are scored in accordance with the criteria that is outlined in the QAP. CHFA intends to award 25% of the 9% credit pool to the preservation classification and 75% to the new construction classification. The QAP lists 22 basic threshold requirements, and all applications, regardless of classification, must meet all of these requirements. One very important threshold requirement is that all applications must demonstrate a credible financing plan. Applications must adhere to the caps on the number of 9% credits allowed by the QAP. Please be mindful that these limits may not be exceeded and waivers are not permitted. The limits remain at 30,000 credits per qualified unit and a total award not to exceed 20% of the population component of the annual credit ceiling.
The IRS has not yet released the 2025 population component multiplier, but it is expected this fall. Population numbers are not released until the spring, so for now, a good benchmark for the 20% of population component limit is the 2024 number of $2,098,000.
Firm commitments for funding are required for all proposed sources of funds except CHFA taxable bond financing and financing sought from DOH. Applications for CHFA and DOH funding are reviewed concurrently with the 9% applications. The QAP states that proposed financing terms must deploy 9% credits effectively and minimally. This means that developments must maximize the use of debt and deferred developer fees in their funding stack. Another basic threshold requirement that is often overlooked is the requirement for at least 20% of the total number of units to be targeted to households above 30% of the area median income and at or below 50% of the area median income. The QAP also requires a minimum affordability period of 40 years. Site control and zoning approval must be provided with the application, and plans and specifications must be at a minimum 40% completion level. CHFA expects development teams to have sufficient capacity to deliver the development in a timely manner should it be receiving an award. Past performance with CHFA and other agencies will be reviewed and must show an ability to meet timelines, stay within budget, execute proposals as originally submitted, comply with program requirements, and operate developments successfully. Applicants are encouraged to ask questions of their development team members about their capacity before selecting them. Trending assumptions for underwriting purposes are 2% for income and 3% for expenses. Operating expense proposals will be reviewed against CHFA's per unit operating expense ranges. Please keep in mind that the published range is for the current year and must be trended forward to the stabilized year proposed in the application. These and all underwriting standards can be found in the Multifamily Rental Housing Program Guideline, which is available on our website, chfa.org. Applications may propose the use of income averaging minimum set-aside. Requirements for the use of this set-aside can be found in the LIHTC guideline, which is also available on CHFA's website. Please refer to the guideline if you are planning on proposing income averaging, as the list of what needs to be included with the application is outlined in the guideline. CHFA's guidelines are based on general understanding throughout the industry and can be superseded by IRS guidance at any time. Applicants need to ensure that their property managers understand the potential compliance challenges with using this set-aside. There is also a published guideline for 4%, 9% hybrid financing structures, also available on CHFA's website. Proposals must be of a scale to produce demonstrable savings of scarce resources and an increased production of affordable housing units. Applicants must discuss the intention to submit a hybrid proposal at the pre-application conference. 9% credit requests cannot exceed the caps outlined in the QAP of 30,000 credits per qualified unit or 20% of the population component of the credit ceiling. Credits per qualified unit will be calculated by adding together the number of LIHTC qualified units in both the 9% component and the 4% components of the proposal.
CHFA has seen an increase in the submission of 9% LIHTC applications for two simultaneous phases of the same development. This is not the same as a hybrid transaction. This is two separate 9% LIHTC applications for the same development. Although it is permissible to do this and to request the maximum amount of funding from CHFA and DOH for each phase separately, the total award of 9% LIHTCs between the two phases cannot exceed the cap of 20% of the credit ceiling. Waivers to this requirement will not be considered. Please note that each phase must be able to move forward independently in the event that only one is awarded.
Here are some helpful hints for achieving maximum points on applications submitted in the new construction classification. You will probably hear more about supportive housing later in the presentation, but as a reminder, the QAP requires a supportive service plan prepared by a qualified service provider as defined in the supportive housing guidelines to be submitted with the application. The supportive housing guideline is also available at chfa.org. The QAP requires a budget for the services as well as evidence of a plan for funding these services. CHFA partners with the Interagency Council on Supportive Housing and Homelessness to review the documentation related to supportive housing. For underwriting purposes, if there are no rental subsidies covering the supportive units, it is assumed that tenants may receive SSI income once they are connected to services. The rental income assumption for non-subsidized supportive housing units cannot exceed 30% of SSI. Points also will be awarded for a commitment of Section 811 subsidies from DOH or a commitment for housing the developmentally disabled from the Department of Developmental Services. Support of a service plan and budget are not required to be submitted when there is a commitment of Section 811 or DDS subsidies. In order to receive the points for an on-site resident services coordinator, a signed document called the Acknowledgement of Guidelines for Resident Service Coordinators must be submitted with the application. This can be found with the Consolidated Application Materials at chfa.org. Other permanent funding sources is a points area where we sometimes see confusion. To qualify for points, the funding must be a non-debt source. It cannot be from any state-administered program such as LIHTC or state historic tax credits, and it must be a firm commitment for a permanent source of funds that is quantifiable over a 20-year period. Contributions from sponsors, developers, or general partners do not receive points in this category. A land contribution requires an appraisal that is dated no more than 12 months prior to the application due date. The appraisal must reflect the proposed site control structure, whether it's fee simple or leasehold. CHFA may adjust the value for any negative conditions, such as environmental work required to get the lot ready to build or any required demolition. Tax agreements must be approved by the municipality at the time of the 9% round application submission, and the applicant must provide a calculation of the value of the tax abatement. Funds from a housing authority or a municipality may be counted in this category if they are not a co-sponsor and do not have an ownership interest in the development, and the award is documented by a formal action. Rental subsidies do not count for points. The priority locations map can be found on the website of Connecticut's Office of Policy and Management with the latest plan of conservation and development. As a reminder, a bus stop is not a mass transit station. Only train stations or stations on the CT Fast Track dedicated busway are considered mass transit stations. If the priority location map does not show that there is a 7-day-a-week bus service within a half a mile of the development, but there actually is, applicants may submit maps and bus schedules to claim this point. This is an example of what the priority locations map looks like. In the transit-oriented development category, local bus stops are not acceptable for proximity to transit points. This has changed quite a while ago, and only train stations or stations along the CT Fast Track will earn points. Maps must be provided to support all points claims for proximity to transit and proximity to amenities. The Concerted Community Revitalization Plan category has very specific criteria that must be met in order to earn those points. The plan must have been adopted by the preliminary application due date of October 25th, 2024. The proposed property site must be within the geographic area defined by the plan, and a standard land use or comprehensive plan is not eligible unless it contains a specific revitalization component. The organization or group that adopted the Concerted Community Revitalization Plan must certify that no principal of the developer initiated the plan, and points will not be awarded without this current certification. Completion of the proposed development must contribute to one or more of the plan's stated goals, and the organization or group must have made or be committed to making specific investments in non-housing infrastructure, amenities, or services beyond the proposed development. An affordable housing plan adopted by the municipality in accordance with Section 830J of the Connecticut General Statutes will also receive points in this category. A new Connecticut Opportunity Map was developed in 2021 and is used by both CHFA and DOH. This is a statewide opportunity map that was developed with support from the Connecticut Fair Housing Center and the Open Community Alliance. This is an example of what it looks like. The map can be found on CHFA's website or DOH's website. You just put the property address in and the map will show which level of opportunity area it is in from very high down to very low. Experience of the sponsor applicant or GP points will be based on the experience of an entity or a principal involved in the ownership structure of the development. Please note that this does not include the property manager. Points are awarded based on the number of LIHTC funded projects that have been in service for at least 5 years. The application submission must include a list of properties and their placed in service dates. Applicants may be established as joint ventures, and the experience of a participant in the joint venture will be considered when the applicant engages a property management company experienced with LIHTCs. Evidence of material participation by any co-sponsor is required. To earn points in the Developer Sponsor Resources category, there must be an investment in the permanent sources of funds, and this does not include a deferred developer fee or tax credit equity. Evidence is required that the funds are available and allocated for the development. Evidence can be in the form of a bank statement or a letter from an accountant, but something must be provided as evidence of the availability of these funds in order to earn points. If the developer is contributing land equity, it must be evidenced by an as-is appraisal that is not older than 12 months from the application due date. It must reflect the correct ownership structure, be it fee simple or leasehold, and CHFA may adjust the value for any negative conditions. If points are awarded for developer sponsor resources, the developer is expected to honor this commitment should they get a 9% award. The amount of this commitment cannot be offset by any funding sources obtained in the future or by project cost savings. Under CHFA's cost certification process, project cost savings goes first to reduce any deferred developer fee and then to reduce the number of tax credits. CHFA is once again offering taxable bond financing products for use with the upcoming 9% round. CHFA offers construction only, construction to permanent, and permanent only loan products. All products have fixed interest rates that are locked in at least 30 days before closing. This year, applications for taxable bond financing will be reviewed as part of the 9% funding round. A soft letter of funding from CHFA is no longer required to be included in the application submission if CHFA is the proposed lender. Applicants are encouraged to explore all financing options and may include multiple letters of financing interest in the application submission. To indicate interest in CHFA financing, simply fill in the CHFA loan line on the sources of funds exhibit of the consolidated application and be sure to choose taxable bonds from the drop-down. The construction-only product has a rate that's based on the 1-month secured overnight financing rate plus 200 basis points. The term is not to exceed 24 months. Interest-only payments will be due until maturity. Prepayment is available in month 16, and all CHFA underwriting standards will apply. The construction to permanent product utilizes the 2-note structure. The construction loan rate is based on the 1-month secured overnight financing rate plus 200 basis points, and the permanent loan rate is based on the 10-year treasury rate plus 250 basis points. The construction term is not to exceed 24 months, and the permanent loan term is 37 years, which includes 2 years of the construction period. There are interest-only payments due during construction on both loans. Prepayment of the construction loan is available at month 16. The permanent loan amortization period can be 35 or 40 years. and monthly amortized payments will commence on month 25 following the construction period. Prepayment of the permanent loan is allowed in accordance with CHFA's Preservation of Housing Affordability Policy Statement, which is found on the website. All CHFA multifamily underwriting standards will apply. For the permanent-only loan, CHFA will issue a commitment and rate lock at the time of closing with the construction lender. The interest rate is based on the 10-year Treasury plus 300 basis points. The loan term is 35 years, but can be amortized over 40 years. There is a one-time full disbursement of the loan proceeds at the permanent loan closing, and the permanent loan closing must occur 24 months from the construction closing. This may be extended 6 additional months subject to an extension fee. Commercial income may not be used to size the permanent loan. A forward good faith deposit fee of 1% of the loan amount is due at the construction closing and is refundable at the permanent loan closing. All other CHFA fees and standard underwriting guidelines will apply. At the time of permanent loan conversion, CHFA will perform an updated underwriting to confirm the income, expenses, the debt service coverage, etc. at the time of rent-up. Other conversion conditions include 100% qualified occupancy of tax credit units, 100% retirement of the construction loan, and satisfaction of CHFA's typical final closing conditions. Again, please see the product descriptions for full details. The use of CHFA permanent loan funding allows the ability to apply for up to $1 million in subordinate financing from CHFA's Opportunity Fund. Opportunity Fund loan interest rates are based on CHFA analysis and underwriting. The term is to be coterminous with the CHFA permanent loan. Interest-only payments are due during construction, and interest will accrue during the permanent term. Payment from 25% of adjusted cash flow is due during the permanent term, and this will not start until full retirement of the deferred developer fee. The debt will be accelerated if CHFA permanent debt is not closed and utilized. All reference materials that I mentioned are available at CHFA's website, chfa.org. Thank you very much for watching this webinar. If you have any questions on the 9% round or taxable bond financing, please direct them to myself, Debbie Alter, at CHFA. You can email me or you may call me at any time. We are available anytime to answer your questions, and we look forward to reviewing your application in the round. Thank you.
Hi, everyone. Glad you all could join us today. I'm Jennifer Landa with CHFA, and with me is Leslie Malaga, the technical services team here at CHFA, and we're going to be reviewing the technical services guidance for the LIHTC program with you. The first point we wanted to make, and I think most of you already are aware, that the classifications are divided in two. We have the new construction classification as well as the preservation classification. So for new construction, this is defined as the production of new dwelling units, of unoccupied buildings, or new construction entirely. So if you have an adaptive reuse of a mill building or a school that was not formerly housing, this would be considered new construction because you are adding new dwelling units to the housing stock. By contrast, preservation is defined as the rehab of existing and occupied multifamily dwelling units. So this is really preserving and rehabilitating an existing property that is currently occupied by multifamily residents. In addition, if you are planning the demolition of an existing occupied dwelling, but you plan to rebuild, that would also be considered preservation because the property is already occupied by residents.
Under the new construction and QAP, which allows you a possibility of 19 points per section, under Section 2, the financial efficiency and sustainability, there is a possibility for 16 points, and Section 3 with local impacts with 3 points. For financial efficiency, 2A, cost effectiveness, you have the possibility of up to 2 points, and 2E, 90% plus, joints and specs, 1 point, and 2F with sustainability for up to 13 points, which will be broken down later on. For local impact, 3E with historic place adaptability reuse in brownfield with 3 points. For sustainability design measures under energy conservation, a total of 4 points, with tier 1 with 2 points, tier 2 with 3 points, and tier 3 with 4 points. Under green building with up to 3 points, and tier 1 for 2 points, and tier 2 with 3 points. Under renewables, electrification, and resiliency, up to 3 points, with tier 1 with 1 point, tier 2 with 2 points, and 1 additional point for all electrical buildings and backup power to provide resiliency to critical systems, energy lighting, and access to potable water. For operations and resiliency, up to 2 points, with tier 1 for 1 point, tier 2 for 2 points, and finally, the sustainability development with digital literacy and connectivity for 1 point.
So under the preservation classification, as we mentioned, the applications are divided into 2 classifications, new construction and preservation. So under the sustainable design measures for preservation, we are asking that applicants propose a scope of work based on recommendations from an energy consultant for the highest energy efficiency and sustainability design measures appropriate and possible to the extent appropriate and practical for the proposed development. So looking at the preservation, it includes benchmarking, energy conservation, a green building, a solar system, PV system, backup power commissioning, and high-speed broadband access to units. So under extraordinary costs, the hard cost effectiveness points, we are asking that applicants provide calculations if they are seeking those points to include the baseline costs, as we've explained above, and also any extraordinary adders to come up with what they feel is their hard cost effectiveness to be due for these points. There are extraordinary costs commonly considered, such as environmental cleanup or building remediation, demolition, siding upgrades, elevator, if your project is subject to Davis-Bacon or state prevailing wages. If there are extraordinary costs related to state historic or National Park Service, please also include those as well. This just shows you, again, an example of extraordinary cost breakdowns that we typically see in projects. A few helpful hints when you complete your application. Please always refer to the CONAP for the threshold requirements, including the required application information and also time-sensitive documents like the CNA, the SHPO, and the Phase 1. The scope of work described in your narrative should also match your plans and specs and your construction costs. Please make sure that that does include all of that information. So you should also include complete project data in the plans and specs, including the number of buildings, building gross area, number of units, common area, and commercial area. So be sure to convey this to your architect that they need to provide that data in their plans and specs, because that is the source document for the CONAP for that information. And for the exploited trade payment breakdown and project cost summary, please be sure to include units in the exploited trade payment breakdown, linear foot, square foot, etc. In those unit costs. We don't like to see lump sums just across the board. So please be sure to ask your contractor to provide as much detail as possible. Again, remember that there is a max on the general requirements, overhead, and profit per the CHFA procedures. Construction contingency for new construction, we like to see between 5 and 8%. And for rehab projects, especially with SHPO or heavy environmental work, we like to see at least 10%. And please make sure that your environmental abatement costs are included in your project cost summary in the appropriate line item, because that does count when we review your hard costs for hard cost effectiveness. So if you're including your abatement costs in another line item, such as rough carpentry, you're not going to get that benefit when we do our hard cost analysis. So please be sure that any abatement or remediation costs are included in your environmental line items. Be sure to include prevailing wages or federal Davis-Bacon, and all sustainability measures that you're seeking points for should be appropriately documented in the plans and specs and project cost summary and exploded trade payment breakdown. Refer to the CHFA environmental guideline for testing requirements for hazardous materials, and please also be sure to include those cost estimates. And just as a side note, you will see in this latest version of the CONAP that we have included an environmental summary tab. So we expect that tab in the CONAP to be completely filled out, listing all of the environmental reports you've included for the property and building, if applicable. We would like to see a summary of and the environmental concerns that have been uncovered in those reports. Anything from groundwater, soil issues, lead-based paint, asbestos, all of those should be included in that summary. And we want to see a breakout per cost for all of those remediation measures. If you need to remediate lead-based paint or asbestos, those should all be separate line items in that energy conservation tab. So just a little heads up on that. The phase 1 ESA must be completed and authored within 1 year of the application deadline. Radon testing is needed for all existing buildings. For gut rehab and new construction, you should be including a radon mitigation system in your document set. So please make sure your architects are aware. And those costs should be carried in your exploded trade payment breakdown and project cost summary. And they should be noted as radon mitigation system, because that will be helpful for us when we're reviewing your application. For sustainability points, there are pre-construction and post-construction requirements for QA and QC, so please be aware. And soft costs for the construction phase, inspections, testing, verification, and all of that need to be included in the development budget. So applications seeking points for energy conservation and green building must provide the completed CONAP and the detailed report in section 4.8E by the professional engineer, which is verifying compliance with all of the green building standards, all the modeling reports, and all supplemental documents required for pre-construction project registration is required. Applicants seeking points for renewables, electrification, and resiliency for PV systems must provide the engineer letters confirming that the annual energy demand for site and common area and lighting has been qualified. So if you're seeking 75 or 90% for the PV system, you must include a letter from your engineer stating that that is what the design has or will be achieving. Points for energy conservation and green building will be based on the percentage of qualifying units. So you can see this is a tally for 2-point, 3-point, or 4-point. Post application, so applications awarded points and under any of these categories will be required to provide proof of the project registration and the payment of the fees for those specific programs, whether it's Passive House, LEED, whatever that is. We need to see that proof of project registration. And applications awarded points under energy conservation and green building will be required to provide her certificates at cost certification. So just a heads up on that.
Hello, my name is Miguel Rivera, and with me is Lisa Quach. We are the Housing and Community Development Managers for the Department of Housing with the state of Connecticut. Lisa, why don't you kick us off?
DOH plans to make commitments of its subordinate financing to support the 9% low-income housing tax credit round. Consolidated applications, commonly known as CONAPs, contains comprehensive requirements for funding that both DOH and CHFA uses together. Subordinate financing is subject to the availability of funds and bond commission allocation and authorization. DOH funding awards should consider $100,000 and could go up to $150,000 for units that are at 50% AMI or lower per qualified unit, up to a maximum of $4 million per project. However, other considerations will be given for larger projects at the department's discretion. Federal resources will be available up to $100,000 per qualified unit, up to a maximum of $1.5 million per project. And if we are using federal funds, don't forget to do your NEPA. You should be mindful that awards are limited to one per developer, sponsor, or owner, and awards will not be made to development entities that have two or more outstanding commitments from DOH that have not closed.
Thank you, Lisa. Applicants must submit a plan compliant with procurement for federal and state resources that includes publicly advertisements for general construction or construction managers, as well as architectural services. Environmental reviews is a two-part process. You can submit your SHPA intake, which is the Connecticut Environmental Protection Act intake form that is available at this hyperlink. We will use this as a way to answer preliminary questions with regards to your project, the site, surrounding environmental conditions, as well as a discussion as to possible overlap with NEPA requirements. Please be aware that hazardous material mitigation standards in projects that would be considered conversions or adaptive reuse has a stricter lead paint compliance standard due to the recent changes in state regulations, as well as clearance requirements for common and finished units. As well as keep in mind uniform relocation for existing tenants or owners could be applicable. An example that we bring up with regards to SHPA and NEPA is in regards to projects and the entirety, not just the site developed area, but the entirety of the site would be if any portion of the site is located in a floodplain designated other than B, C, or X. Applicants will need to contact our peers at the Department of Energy and Environmental Protection for a pre-application discussion. That is a mandatory requirement. It has a long lead time if you have to proceed with flood management certification, which could take 4 to 6 months. So please initiate that consultation before so that you could have that in hand for your application submission. Please note that levee protection, if applicable, must be active and maintained and documented. So thank you ahead of time. Other considerations. We are looking to maximize debt and deferred developer fees. These amounts may be adjusted during underwriting to reduce the use of scarce state and federal resources. Nonprofit sponsors projects that include units to primarily serve persons with disabilities, veterans, or homeless families or individuals should contact DOH to discuss subordinate financing limits for their project. Please note that senior or elderly population is not listed here as an exception. You may contact us. First, general inquiries should go to the DOH-DEVELENGAGE@ct.gov link, but you may also CC both myself, Miguel Rivera, at rivera.miguel@ct.gov, or you may also reach out to Lisa Quach at lisa.quach@ct.gov.
Hello, everyone. I'm Todd Levine, architectural historian for the State Historic Preservation Office.
And I'm Marina Wisniewski, preservationist for the State Historic Preservation Office. And we are here to discuss regulatory compliance as it applies to SHPO when you apply for CHFA programs.
Normally, we would give an overview of our process and wait to see if there were any questions. But since you're watching as a recording, we thought we'd take this opportunity to answer the questions we get asked most often up front, such as, who are you and why do I have to talk to you?
But before we get there, I want to highlight what our priorities in the process are. There are two major things. One, preserve historic fabric, and two, do so while encouraging an efficient review process. That begs the first common question.
What is historic fabric? All right, it's all of these examples and many more. Historic fabric is what makes up historic resources, which for regulatory purposes are properties listed on either the state Register for Historic Places or the National Register of Historic Places, or determined by our office to be eligible for listing on either. Remember that phrase, eligible for listing. They come in all shapes and sizes and from different time periods. They can be an individual property like the New London Harbor Light in the middle, or an historic district like Litchfield Center in the lower left. They can also be archaeological resources, which means underground, or objects like the red orange stegi here in Hartford. Speaking of which,
it's time to answer another common question. Why do I have to talk to you? Short answer, it's the law, or rather, several laws. The National Historic Preservation Act of 1966 established a multifaceted approach to recognizing and protecting our shared history. As part of this, a process of review was established under Section 106 of the Act, which requires that any project necessitating federal action, be it funding, permitting, property transfer, or others, evaluate how that action will impact historic resources. Connecticut has a similar law, the Connecticut Environmental Policy Act, which requires that any project that utilizes state or federal funds or permitting consider its effect to historic resources. The State Historic Preservation Office was also created as part of the National Historic Preservation Act and conducts these reviews based on the information submitted. In order to ensure a timely and thorough review, we have created a brand new digital system to help.
This is the new digital submission system. This is how you submit a review now. It's available on our website, which is ct.gov/historic-preservation in the environmental review section. All reviews must be submitted now using the system. This means you will never have to submit a paper form again. The new system is fairly straightforward and includes information such as location of the project, who is proposing the project, which we call here at SHPO the project proponent, the scope of the project, and what state or federal agencies are involved. It also includes a link, first time here, in case you have additional questions, to the point of which agency or agencies are involved. Knowing where your permit or funds are coming from helps us know under which laws this project is being reviewed. For CHFA applicants, you already know the agency and you know which program you're applying for. This presentation is geared toward those applying for the 9% low-income housing tax credit competitive round, so it is very important that you put that in the funding source in the website portal. Do not leave it blank. This has a very specific deadline, and in order to respond to you within the appropriate time period, we need to know what it is you are applying for. As part of your funding package, you may also have HUD funding. So that would be reviewed under Section 106 of the National Historic Preservation Act. The Low Income Housing Tax Credit is a state program, so it's reviewed under the Connecticut Environmental Policy Act. If you don't know, ask the agency you're applying to what the funding source is. But when in doubt, send it in. It's very important that you put in the requested information at each step. Incomplete applications delay the process because we have to try to figure out what you're doing and why, or we have to reach out to you. Note the red box that is outlining a section called Project Description. That space is for a quick summary of the project. You will probably not be able to describe the entire project in detail within that box, but that's okay, because that's not what it's for. It's for us to get a general idea of what you're doing. For instance, is it new construction of a 4-story building? Is it a rehabilitation of an old mill? And please do not put C attached. I promise I'm going to look at all the attachments, but when I first receive the information in the submittal, I need to know the gist of the project. If new construction involves ground disturbance, for instance, it has to go to our archaeologists. The documents that you upload in this section should be anything you have that will help us understand the project. If you have drawings of renovation work, include that in the project plans. Upload a written scope under project narrative. If you are building new on an open parcel, include the soil map. include that in supplemental so we know if it contains potential for archaeological deposits. The more you can share with us, the more likely it is we won't have to ask for more information, which lengthens the time in which we can get a letter out to you. This includes photos. There's a minimum upload of one single photograph, but usually multiple photographs are helpful. Speaking of which, it's important that you plan ahead and allow enough time for the project to be reviewed. If you have submitted a complete application, general review time is around 30 days or less. However, if you did not include all the information, we will have to reach out to you, which will take more time. Rule of thumb, the more complete an application is and the more information you provide to us, the less time it takes to review.
The next most common question, when do I hear back from you? If you filled out the form correctly and we have all the information we need, you can expect a letter from us within 30 days. All of our letters from now on are electronic to help expedite reviews. The letter has 4 possible outcomes, or a determination of effect. The first one, which is what 90% of our letters say, is no historic properties affected. This means exactly what it says. There aren't any historic properties that will be impacted by the project. The second one is no adverse effect. This means there is a historic property that will be affected, but nothing that would negatively impact its historic fabric or its historic character. The third possible outcome is a conditional no adverse effect. This means that there is a historic property and that the majority of the project won't negatively impact the resource, but there are 1 or 2 items of the project scope that should be modified to avoid harming the resource. An example of this could include retaining rather than replacing architectural trim, using a more compatible material for a new addition, reconfiguring parking so it doesn't disturb archaeological resources, or other very specific items. Conditional no adverse effects are usually issued after we have reached out and spoken with the project proponent. This is a way for us to get you a letter without having to resubmit to the project and to help keep the process moving. The last possibility, which neither we nor the project proponent want, and the one that no one wants, is an adverse effect. An adverse effect is found when an undertaking, quote, may alter directly or indirectly any of the characteristics of a historic property that qualify the property for inclusion in the National Register in a manner that would diminish the integrity of the property's location, design, setting, materials, workmanship, feeling, or association. For state-funded projects, this definition also applies to state register properties. It's a long definition, but basically it's a project that will harm a resource.
So, what if the finding is an adverse effect? Bad news, everyone. It means that we have to take a deeper dive into the project and have a deeper conversation with SHPO to resolve the adverse effect. And remember, legally, we must resolve. This is a must in the law, especially for federal law. So there are 3 ways that we resolve the adverse effect: avoidance, minimization, or mitigation.
The first option, avoidance, is pretty easy to do if you follow the earlier advice to plan ahead. Part of that is to be cognizant of what resources you have at the outset. There's a book on how to do it, the Secretary of the Interior's Standards for the Treatment of Historic Properties. The Standards is your manual for how to treat historic properties and is free, so download a copy at nps.gov/TPS/standards. But wait, there's more. Tell them, Todd.
That's right, Marina. In addition to the standards, you also have a free resource in SHPO. If you know you will be applying for state or federal programs, feel free to reach out to us early and often. Because SHPO loves people, we can help you identify if there is a resource in your project and how best to treat it within the larger scope. Again, reaching out to us early helps to streamline review and make sure you stay on track time-wise.
In addition to reaching out to us directly, there are other resources that you can access to gain more information on any historic property in your project area. Digitally, the National Archives holds all National Park Service records up to 2012 for properties that are listed on the National Register of Historic Places, while our office holds a digital system for all properties listed on the State and National Register of Historic Places. For anything that does not fit within those parameters, you can request to view our paper files. Normally, we are very flexible regarding researchers, but since access to our office is currently limited, it may take time to schedule an appointment. Our office administers several financial incentive programs for the rehabilitation of historic properties, including the Federal Rehabilitation Tax Credit Program and the State Rehabilitation Tax Credit Program, which offer a 20 and 25% credit on eligible expenses, respectively. Some of you may have used them on other projects. And as a bonus, projects that include an affordable housing component get an extra 5% credit. The work has to be pre-approved, which fits right into the plan ahead guidance. Properties must also be listed to take advantage of these programs, so check out the NPS and SHPO databases or feel free to reach out. So we've thrown a lot of information at you in a very short amount of time. So let's recap with a checklist that you should all keep in mind. Reach out to us early.
This is perhaps the most important point.
Check to see if you already have a historic resource in your project scope,
either through the databases or by reaching out to us directly.
Consider if the project will utilize historic tax credits or other incentives.
And if you are, be sure to read the requirements on our website.
Fill out the online submittal. Include ancillary documents.
Give us anything that you think would be helpful and anything you don't want us to have to ask you for later.
Do not mail in a hard copy.
We are no longer accepting hard copies, and it will be returned, and you'll have to submit everything again digitally.
Supply additional information if requested.
And if you did everything above, we will need to ask you for additional information, and you saved yourself a step. Thanks everyone for being so attentive, and if you have any questions, please reach out to us. We are always here and able to help. Thank you.
Hello, my name is Tawny Foe, and I am a housing specialist at the Connecticut Department of Housing, and one of my roles is program coordinator for the HUD Section 811 Project-Based Rental Assistance Program, which we commonly refer to as CT 811 or 811 PRA, but for this presentation, I'll simply call it 811. For this LIHTC overview session, I will share information with you about 811, as these program funds are a potential rental subsidy resource for your proposed housing developments. The Connecticut Department of Housing announced in August an award of $7.9 million in 811 grant funds by the U.S. Department of Housing and Urban Development to support approximately 158 additional subsidized housing units for extremely low-income individuals with disabilities. Some 811 basics. This is a federal project-based rental assistance program designed to generate permanent supportive housing units. It starts as a HUD grant, which has been awarded to the Connecticut Department of Housing as the lead grantee in our state. The Department of Housing partners with the Connecticut Housing Finance Authority, Department of Social Services, the Department of Mental Health and Addiction Services, the Department of Developmental Services, and the Office of Policy and Management to administer the grant. 811 provides rental subsidies for units with gross rents up to the applicable HUD fair market rent. It's very important to note that this program provides rental assistance funds only. There are no service or capital dollars. So what does this mean for you as a developer? DOH is in search of new construction, rehab, and adaptive reuse projects. And perhaps this is not something you're thinking about for this session, but we are also able to contract with existing projects so long as we can expect adequate turnover. A few highlights of the 811 program requirements. The assistance is limited to no more than 25% of the project. This limit is in the spirit of integration to ensure that supportive housing for persons with disabilities is dispersed within non-use restricted communities. Rental assistance contracts between DOH and the owner are for 20 years with a recorded 30-year use agreement. It's important for you to note that the threshold count that triggers Davis-Bacon labor standards is 12 units. The project would be subject to a HUD environmental review unless the project already receives HUD environmental clearance for other qualified programs. The units must meet requirements set forth in the National Standards for the Physical Inspection of Real Estate, also known as INSPIRE. I'll go over some of the basic project eligibility requirements. Again, it can be a new or existing property with at least 5 units. Development costs can be paid with any public or private resources, except for HUD Section 202 or 811 capital advances, because those programs have additional use restrictions that don't align with 811 PRA. If the units are senior restricted or already restricted for persons with disabilities, or if they already receive or recently received a long-term operating subsidy, they do not qualify. What projects do we prefer? Ones that are near public transportation and community services, high opportunity areas, Efficiency and one-bedroom units are ideal, as well as units that are accessible or adaptable. And ideally, we want to work with properties that will be managed by agencies with federal project-based subsidy and HUD systems experience. While everything may sound good and well from the development perspective, the heavy lift for this program is really on the management agent who are tasked with program compliance. Who does this program assist? Eligible households are extremely low-income individuals and families with at least one individual who has a qualifying disability and is between the ages of 18 and 62. In addition to this, the 811 program targets 4 specific population groups. 1, persons who are experiencing homelessness and receiving assistance through the state's coordinated access networks. 2, persons who are currently institutionalized and eligible for the state's Money Follows the Person demonstration program. 3, persons eligible for services under an approved 1915C waiver for persons with autism spectrum disorder. And 4, persons eligible for services under an approved 1915C waiver for persons with intellectual or developmental disabilities. Throughout this overview session, you will hear from representatives from various state interagency partners of the 811 program. They will each provide more information on the respective population groups that they serve. Qualified applicants are referred directly to the 811 set-aside units, although I always emphasize that the applicants are still subject to the property's resident selection plan. A feature of this program is that through our partnership with the state agencies, 811 applicants and tenants are connected to support services. Here I've listed some examples of those services. Now, if you recall on an earlier slide, I emphasized that this program does not provide service dollars. Think of it this way. The rental subsidy is project-based, but the support services are tenant-based. They can come and they can go. Can services stop and the tenant remains? Yes. Receipt of services is not required for the tenant to maintain their subsidy. Now, how does the 811 program tie in with the QAP? Within the category of rental affordability, you can receive points for commitments of supportive housing and for units targeted at households at 30% AMI. Participation in 811 completes both of these checkboxes. The program, by definition, is supportive housing for persons with disabilities, and it is restricted to 30% AMI households. In addition to this, if you haven't already, please become familiar with the supportive housing guideline. It is a supplemental guide to the QAP, and it's been revised for this upcoming tax credit round. This guideline spells out a few other requirements for the participation in 811. You need to commit a minimum of 10% of the units at the property with a cap of 25%. With participation in 811, you are not required to have service funding or a service plan in your LIHTC application, as tenants are matched to support services upon referral to the program. However, you should still seriously consider identifying a service provider for your development, as tenants generally receive more robust support services at a higher frequency from an on-site provider. Conversely, consider budgeting for a resident services coordinator to help your tenants create and maintain connections to outside services. These are recommendations for you to consider to strengthen the operation of your property. How can developers apply for the 811 program? DOH is currently accepting 811 project applications on a rolling basis for projects that have already received a low-income housing tax credit allocation, assistance under the Home Investment Partnership Act, and or financing commitments from any federal, state, or local government program. If the proposed project has not yet received a tax credit allocation, assistance under home, or any other financing commitments from an eligible source, you must submit through the DOH development engagement process, which is open biannually in the fall and spring. Application materials are posted on the program page of the Department of Housing website, but I recommend that you reach out to me directly to discuss your ideas and any questions that you may have before proceeding. My contact information is found on the slide. I look forward to hearing from you and about your proposed developments. Thank you.
Supportive housing and the CAN referral process. I am Terry Nash for the Interagency Council on Supportive Housing and Homelessness. I'm going to describe for you a little bit about supportive housing and the CAN referral process and provide contact information to help you with your application process. Developer LIHTC applicants that wish to include traditional supportive housing in their developments must provide documentation with the consolidated application that they submit. This documentation must include a service plan from a qualified service provider or an Interagency Council on Supportive Housing and Homelessness recognized service provider, following the outline in the Supportive Housing Guideline. A qualified service provider is a community-based service provider organization that receives funding and extensive training from the State of Connecticut Department of Mental Health and Addiction Services. An IACSH recognized service provider is a community-based service provider organization experienced in the provision of tenancy-sustaining services, often for specialized and very specific populations. These organizations will be recognized by the IACSH as an acceptable substitute for the qualified service provider when necessary and upon request. In order to have an organization recognized by the Interagency Council on Supportive Housing and Homelessness, please reach out to me, Terry Nash, at CHFA, or Steve DeLella at the Department of Housing. When leasing units set aside for the homeless or special populations, the first step is to engage the coordinated access networks. The property manager provides the local CAN manager with property unit availability and details. The CAN then refers households that meet eligibility requirements. Property managers follow the resident selection plan in confirming the applicant's eligibility, and the service provider will assist the applicant through the leasing process. Note the map which describes the regions of the CANs throughout the state. There are 7, and they are outlined in the Supportive Housing Guideline with all the towns listed in each regional CAN. This contact information for the regional CAN leadership is also provided in the 2024 and 2025 Supportive Housing Guideline, which is found on CHFA and DOH's websites. Statewide CAN managers reside at the Department of Housing. Lee and Kara are your first contacts should you have any concerns related to the lease-up process or continuing occupancy of the supportive housing units. Thank you.
Hello, my name is Elva Caraballo, and I serve as the Director of Housing for the Connecticut Department of Developmental Services. The Connecticut Department of Developmental Services partners with individuals, their families, and support groups to help individuals with intellectual disability lead fulfilling lives within their communities. The mission of the Department of Developmental Services is to partner with the individuals we support and their families to support lifelong planning and to join with others to create and promote meaningful opportunities for individuals to fully participate as valued members of their communities. Residential services offered by the Department of Developmental Services provides individuals with supports necessary to meet their individual goals and to live as independently as possible. Among the residential alternatives is individualized home supports, where staffing is intermittent. Support services are based on the individual's level of need and are delivered in the home and within the community. An individualized plan is developed and updated regularly, identifying the services to be provided to enable the individual to develop, improve, or enhance their ability to live as independently as possible in their community. Examples of the services include budgeting and money management, managing medical needs, and exploring ways to expand to their circle of friends. Clustered home supports enable providers to provide supports more efficiently by serving multiple individuals who live in geographic proximity for the purpose of sharing community and/or social activities to foster companionship, relationship building, and to engage in preferred community and social activities. Examples include activities such as grocery shopping and shared and preferred recreational activities. Assistive technology has greatly enhance the option of living independently for individuals with intellectual disability. Assistive technology is any item, piece of equipment, software program, or product system that is used to increase, maintain, or improve independence within an individual's home and/or community. Assistive technology enhances communication, promotes inclusion, and increases an individual's overall independence. Assistive technology can help individuals feel more secure, confident, and can replace the need for in-person support during a particular period of time or activity. Assistive technology can be low or high tech. It can be hardware such as prosthetics, mounting systems, and positioning devices, computer hardware like special switches, keyboards, and pointing devices, computer software like screen readers and communicating programs, inclusive or specialized learning materials and curriculum aids, and much more. Electronic devices, wheelchairs, walkers, braces, educational software, power lifts, pencil holders, eye gaze, and head trackers, and a lot more. Remote support is a form of assistive technology that significantly enables individuals to live independently. Remote supports is access to living assistance virtually via technological device provided by a paid staff or a natural support person to engage in live two-way communication. Remote supports may include motion sensing systems, radio frequency identification, live video or audio feed, GPS tracking, web-based oversight system, a device that otherwise meets the requirement for two-way communication. DDS has for quite some time supported groups of individuals in apartment complexes. These were often referred to as clusters. DDS seeks to expand supportive housing in new and existing developments. DDS has initiated opportunities for providers to initiate or expand supportive housing in existing developments. The process is similar to project-based, without construction considerations. Our supportive housing goals are to expand access to integrated, affordable supportive housing, to strengthen linkages between housing and service providers, to demonstrate the effectiveness of smart home and assistive technologies, and to support individuals moving from institutional care to living as full members of a community. We have partnered with the Department of Housing, and through that partnership, we provide rental subsidies for units within the HUD fair market rental limits. We provide both rental assistance and ongoing service provision. We seek to work with multi-unit, new or existing properties with at least 20 units owned by private, nonprofit, or public housing entities where no more than 25% of the units is dedicated to special population set-asides. We operate similarly to the Connecticut HUD 811 program, except that we are not limited to adults age 62 or below. We have adults that are older. And though we prioritize individuals with incomes at or below the 30% of AMI, we do not limit by that income restriction. We adhere to all of the supportive housing guidelines. Developers who are interested in working with the Department of Developmental Services on a supportive housing project identify a partner agency who is a DDS provider that's qualified to engage in the development of supportive housing. We provide a list of these eligible DDS service providers in the Supportive Housing Guidelines Appendix. The developer and the service provider develop a plan, which is then submitted to DDS regional and central offices. Regional and central offices are available to provide guidance and technical assistance as needed while this partnership is being developed. DDS reviews and approves the proposals at both the regional and central office levels, and our commissioner issues a letter of commitment to a developer for project-based rental subsidy for the identified supported units. Service providers have an ongoing role with the individuals who are the prospective residents for supportive housing. Service providers participate in development meetings during the construction phase. They identify the prospective tenants from among individuals supported by DDS. They support these individuals and their families throughout the screening and application process and during the transition to the apartment. Providers continue involved with the individuals, providing ongoing services and supports as determined necessary by the care team, which is comprised of the individual, their family members, the service provider, and a DDS case manager. In partnership with the DDS case manager, the provider seeks to ensure safety and stability of the new living situation. We've developed a checklist that we like to review with developers and design team once the project has been approved by the DDS commissioner, but before the funding application is completed for the Department of Housing or the Connecticut Housing Finance Administration. We are interested in efficiency apartments, 1-bedroom and 2-bedroom units. We want them to be near public transportation and near community amenities like grocery stores, convenience stores, drugstores, eateries, community centers, urgent care providers, entertainment venues, etc. We're looking for ADA accessible units and ADA accessible ready units. In terms of parking, our experience tells us that one of the areas that is often overlooked is the need for a van-sized accessible parking space near the front door, obviously. The building entrance needs to be accessible with maneuvering clearances, accessible door hardware, and barrier-free thresholds. There are some construction and design needs that occur sometimes when we've identified individuals early on who we know will need, for example, particularly heavy equipment like a Hoyer lift, for example. And so the blocking for lifts and furniture and for future special equipment may be needed. Noise mitigation. So we may need enhanced soundproofing and insulation between units or within a unit for a specific area like a bedroom or a kitchen. An open floor plan that accommodates wheelchairs and zero thresholds throughout wherever possible. Electronics and telecommunications. I've spoken before about the extensive use of assistive technology, which makes it possible for individuals to live alone. And so that is a priority as we look at the different developments. So we need adequate Wi-Fi and broadband, intercom and security with office interconnection, Wi-Fi thermostats with remote access. In a community room, we need tables under which wheelchairs can fit. If there's any cabinetry or sink or appliances in the community room, they need to be designed so that they are accessible for individuals who are in wheelchairs. We need a dedicated office space for the service provider on the premises. It needs to be wheelchair accessible, and there needs to be approach and maneuvering space, and we need accessible door hardware. With office interconnection would be so that there is an interconnection to that office so that we can monitor as necessary. In terms of the mailbox areas, it needs to accommodate wheelchairs, walkers, canes, etc. It needs to have accessible parcel delivery, and accessible boxes need to be at a lower level. And we have learned that sometimes if we need to address accessibility needs, we will require the U.S. Postal Service agreement, which means we need to engage with the local postmaster early in the design process. Otherwise, that will slow things down. It becomes a change order. In the kitchen, we need accessible working counter space with a front approach clearance, refrigerators to be ADA compliant models for height and design, turnaround space, especially if the kitchen is a galley kitchen with a dead end. At least 50% of the cabinet space should be within accessible reach, and appliance control layout and accommodating and features need to be kept in mind as we make decisions about what appliances are going to be in the kitchen. In the laundry room, we're interested in having front-load washer and dryers on a raised platform. We want them non-stackable, and we need approach and maneuvering floor space in front of them in terms of being able to access them and use them from a wheelchair. If a common laundry facility is provided, then accessible folding counter space and the machines that are accessible are obviously needed as well. For units designed for individuals in a wheelchair. If a resident uses a powered wheelchair, there's a 42-inch doors that are needed. A minimum of 66-inch turning space dimensions are needed. Electronic door opening and controls inside the unit is necessary. Extra wide door frames. Accessible door hardware and accessible height door peepholes if a peephole is provided the door, and zero barrier thresholds are also needed. For units that are specifically made ready for individuals in a wheelchair, the counter height and cabinet height needs to be adjusted, obviously. Ability to roll under the sink, scald protection on drain pipes and disposals if pipes are exposed. Ability to access a dishwasher. in the bathroom, no lip in the roll-in shower, and a strip drain immediately outside of the roll-in shower, and an extra drain in the floor of the bathroom so that the water can drain out and prevent any kind of flooding outside the bathroom. For closets, we need extra wide door frames, rods that are set at a reachable height for an individual in a wheelchair, and a maximum height of shelving to be 48 inches, and accessible door hardware. Some miscellaneous items are control switches that they be placed within reach for someone in a wheelchair, including light switches, electrical outlets, controls for above stove range hoods, light and fan operation, and controls for other items in the kitchen, actually throughout the unit, that are often placed out of reach for individuals who are in a wheelchair. For any information or wish to discuss any aspect of working with us to increase the amount of supportive housing that's available, please feel free to reach out to me. Again, Elba Caraballo, I'm the Director of Housing for the Connecticut Department of Developmental Services. Here I provide my email and my cell number. We look forward to partnering with you to address this critical need, and thank you very much for the attention and time that you have provided. I look forward to working with you.
Hello, my name is Yvonne Lopez, and I'm the Health Program Assistant 2 for the Division of Health Services under the Department of Social Services. Today, I will be discussing Money Follows the Person within the CT 811 population. Consumer eligibility for Money Follows the Person under CT 811 include those who are currently residing in a long-term support and service facility and are seeking transition to a community setting of their choice with the use of home and community-based services. It also includes individuals between the ages of 18 to 61 with a qualifying disability. Some services consumers have access to include but are not limited to case management, personal care assistance, behavioral management counseling, home health aides, transition coordinators, housing coordinators, as well as access to Medicaid and food assistance benefits. Property owners and management agents can reach out to various individuals based on the consumer's coordination team. Some examples include some consumers may have a conservator who manages their financial affairs and other personal affairs, case managers that can help facilitate assistance for the consumer in multiple areas, often for the term of the consumer's access to the program, housing coordinators or transition coordinators regarding any concerns within the transition from the LTSS setting to the community setting, home health aide or living caregiver if there are any other concerns regarding daily activities, as well as an MFP representative at the DSS central office. Many property owners and managers working with the state of Connecticut have developed a relationship with the MFP program. This relationship allows for properties to communicate directly with the Access Agency and State Department staff when units become available inside and outside of the CT 811 program. It also assists in some cases to help provide accessibility modification funds to properties to create a more accessible unit for the MFP participant, which becomes a unique additional feature for future potential tenants. If you'd like to learn more about MFP, please contact Tamara Lopez at tamara.lopez@ct.gov or myself at yvonne.lopez@ct.gov.
Hello, my name is Nate Calixto, Autism Support and Resource Specialist with the Connecticut Department of Social Services, Autism Division within the Community Options Unit. One of my roles include coordinating appropriate referrals for the CT 811 program when a unit becomes available. Our target population consists of individuals receiving supports and services from the Department of Social Services Autism Spectrum Disorder Waiver Program. The Department of Social Services Waiver for Persons with Autism is a Medicaid Home and Community-Based Services Waiver Program. The Medicaid Home and Community-Based Services Waiver Program is authorized in 1915C of the Social Security Act. Waiver services complement and/or supplement the services that are available to participants through the Medicaid state plan and other federal, state, and local public programs, as well as the supports that families and communities provide. For the individuals found eligible, for the ASD waiver. Individuals determined eligible for the DSS ASD waiver program have a primary diagnosis of autism, do not have an intellectual disability or full-scale IQ score of 70 or higher, and have been found to have substantial limitations in 2 or more of the following major life activities. 1. Self-care. 2. Understanding and use of language. 3. Learning. 4. Mobility. 5. Self-direction. Or 6. Capacity for independent living. All DSS ASD waiver participants have an assigned case manager. Case managers are responsible for the development of a written individualized plan by using the results of assessment tools, consulting with the client's family, or the client's authorized representative. Individualized plans contain client goals and the supports required to meet those goals. The individualized plan describes the type, amount, frequency, and duration of services to be provided to the client. This is a fluid plan of care, meaning supports and services can change to meet the individual's needs. Providers must contact the client's DSS case manager to obtain prior approval before implementing any proposed changes to the plan of care, which includes adding, reducing, or providing different services. There are 14 supports and services offered under the waiver, which include clinical behavioral supports, social skills groups, job coaching, life skills coach, community mentor, individual goods and services, personal emergency response system, respite, assistive technology, interpreter, non-medical transportation, nutrition, specialized driving assessment, and live-in companion. So how do we identify waiver participants who may benefit from a CT 811 unit? The individual plan of care developed collaboratively with the waiver participant and DSS case manager would include one or more eligible waiver services and identify whether the participant needs affordable, supportive housing. As DSS leadership and key staff are involved in both the unit identification, referral, and placement processes, potential client barriers are identified prior to referral and requests for reasonable modifications are communicated with the management agents prior to leasing the unit. This coordinated effort between the subsidy provider, services, and housing owner agents reduces the average time required to ensure a safe and successful transition. While the location of these project-based housing resources is important to every population, location becomes particularly significant for the ASD population as service providers and agencies are available in only certain localities and there is a greater reliance on each individual's natural supports from family and friends. DSS leadership and key staff will continue to coordinate with the Department of Housing staff to identify priority areas and units designed for or are adaptable to the needs of this population. To learn more about the DSS ASD waiver program, call 1-800-445-5394 and press option 6. Or to access the Division of Autism website, you can visit www.ct.gov-dss, click on Programs and Services, and click on Autism Spectrum Disorder ASD.
Hello again. This is Debbie Alter, Senior Program Officer for Program Administration at CHFA. I will be going over SharePoint and the Consolidated application. SharePoint is a Microsoft application that is utilized for the submission of applications to CHFA and DOH. Each application request will receive its own dedicated SharePoint website, enabling users to efficiently access, manage, and share their application information. Here is a snapshot of what it looks like. SharePoint facilitates collaborative teamwork, enabling multiple team members to work on the application simultaneously. This allows team members to assign and complete tasks, update a single ConApp, and upload files as needed. To get access to SharePoint, a request must be emailed to applicationrequest@chfa.org. The request must include essential details such as the funding program the application is for, the program name, and contact information for all users who will require access to the site. For further information and instructions on what is needed for the request, please see the General SharePoint Web App Instructions located on our website. Please note the following important points. Each application is allocated its own dedicated site. Therefore, we require a separate email request for each application. Please do not combine multiple requests within a single email. For instance, if a hybrid financing structure is being proposed, one email requesting a SharePoint for the 9% portion and one email requesting a SharePoint for the 4% portion is required. Please allow 2 to 3 business days for the site to be created. Once it's ready, you'll receive an email from SharePoint containing access information. Each email address used for SharePoint must be associated with a Microsoft account. Please see the general SharePoint web app instructions on our website. Microsoft has implemented enhanced security measures that restrict group members from sharing the site with external users. In order to share the site with other team members who do not have access, an email request containing user information must be sent to applicationrequest@chfa.org to request the addition of users who need access. Once in the portal, you'll find a description of the funding round along with convenient quick access buttons on the left side. These buttons offer access to the task list, the CONAP workbook, file upload features for the required exhibits, the reference library, and there is a user-friendly help section to assist you with navigating the site. You will also see the SharePoint project task list, which displays a collection of tasks that are part of the application. Tasks can be assigned to specific team members, and due dates can be set for each task. The task list provides a timeline of activity prior to the application submission date. Items can be checked off as completed. However, please note that once you check off all items and the last checkbox called Ready to Review is checked, the site will lock. Your application will be submitted and no further changes can be made. The blank CONAP will be available inside SharePoint for download, and it can also be downloaded from the CHFA and DOH websites. Here is a snapshot of the location of the CONAP in SharePoint. It can be accessed right from the home screen or from the CONAP Workbook Quick Access button on the left side. When accessing the CONAP, please note that Microsoft has updated their security protocols and disabled macros in files from the internet. You must download the CONAP and save it to your PC and then open it from there to make any necessary changes for the macros to work correctly. When you have finished it, upload it back up to SharePoint and remember to do so prior to the submission deadline. Please make sure that you are using the latest version, which is the version that is available to be downloaded from SharePoint or the CHFA and DOH websites. Please do not use prior versions of the CONAP as changes may have been made. The File Uploads section is dedicated exclusively to exhibit uploads. SharePoint offers the convenience of drag and drop for easy file uploading. You can upload multiple files simultaneously and organize them into specific section folders. If you make an incorrect upload or if you need to replace a file, you have the option to remove and replace the uploaded item. When naming your files, please keep file names brief and relevant. Use abbreviations where possible and avoid using project names. Do not use unnecessary spaces or hyphens for concise file names. If the file names are too long, our system cannot download them properly, so please make an effort to be brief and relevant. Section folders in the File Uploads section are aligned with sections in the Consolidated application. Upload files containing exhibits to the relevant section folders. The Reference Library section includes several exhibits and forms that are to be completed and submitted with each application. These forms are also found on the Consolidated application page of CHFA's website. A help section is available to walk users through steps on how to use each section of the SharePoint site. It can be accessed by the Quick Access section on the left or by clicking the help links in each section's description. To ensure the smooth processing of your documents and to prevent submission errors caused by last-minute uploads to the site, we recommend uploading your documents as they are completed. CHFA will commence reviewing the documents uploaded to SharePoint after the application submission deadline. Any items submitted via email will not be considered part of the application. To formally submit your application and lock your site, mark all the items in the task list section 2 as complete. Please keep in mind that the submission deadline is 4 p.m. on January 15, 2025. The SharePoint site will automatically lock at that time if it has not already been locked by the applicant. Should you have any questions on SharePoint, feel free to send them along by email to applicationrequest@chfa.org, and we will respond promptly. Questions on the consolidated application can be directed to me. Thank you.